In the last session, we have learned the methods of maintaining capital account, fluctuating and fixed. In this session, let us learn how to prepare profit and loss appropriation account. Now, when you talk about profit and loss appropriation account, remember it's a nominal account. Nominal account means what? What is the rule for nominal account? Debit all expenses and losses, credit all incomes and gains. So when the problem is given, we'll see, is it an expense or a loss for the partnership firm? If it's an expense or a loss, we'll debit that. If it's income for the partnership firm, we'll credit that. Here we only take income, expenses and losses. Any assets, any liabilities are not to be shown here. In appropriation account, entries for capital, the amount of capital, the amount of drawings are not shown. They are shown under capital account. So let's see how to prepare this. Let us take up one full problem. A and B are partners in a firm sharing profits and losses in the ratio of 1:1, equal ratio. The partnership deed provides the following. So here it's a written agreement. What it provides? Interest on capital is allowed at 10%, drawings at 8%, A is getting a salary, B is receiving a commission. Before you enter anything, first let us record the profit. Profit usually will be at the end of the problem. The net profit for the year ended 31st March 2018, before making the above adjustments, before making means what? Before taking into consideration this 1, 2, 3, 4, the profit is 50,000. So now we'll consider that 4 adjustments and see what is the exact net profit. Now it's a profit. Profit means income. Incomes on the credit side. If you want to apply the American accounting system, instead of saying that it's a nominal account, rule for income, rule for profit: debit, decrease in income; credit, increase in income. This is what already we have learned. Let me repeat: debit, decrease in income, and credit, increase in income. So if it's a income, your profit will be increased on the credit side. If it's an expense or a loss, your income will be decreased, it will be reduced on the debit side. So first, let us record the net profit. Net profit is an income. We'll first show it on the credit side. By net profit 50,000. We can show it as by net profit 50,000 or by balance brought down. Let us see the transactions now. The partnership deed provides interest on capital at 10%. First question is, what is interest on capital to the partnership firm? Is it an income or expenditure? Partners invest the money. So we have seen in the last sessions, when partners invest the money in the business, for the partnership firm, it's a liability. Capital is always a liability. So when they invest the money, it's a liability. Partnership firm has to pay the interest to the partners. Partnership firm has to pay the interest to the partners. It's like a bank deposit. When we deposit the money in the bank, it's but obvious that bank will pay us the interest. So for the bank, what interest they are paying us is an expenditure. Similar, what partnership firm is paying interest to the partners is an expenditure to the partnership firm. It's an expense, we debit. It's an expense which reduces the income, we debit. Let us record that on the debit side. 2. Interest on capital. Let us check out. There are two partners, A and B. So the capital of A is 80,000. He is getting the interest at 10%. 10% of 80,000, what we get is 8,000. Capital of B is 60,000. Of that 10%, which comes to 6,000. So the total interest 14,000. We can do it directly in the account or prepare a separate working note for that. Now, after interest on capital, what we have is interest on drawings, which is charged at 8% per annum. Drawings means what? Amount withdrawn by the partners from the partnership firm for their private use. When the amount is withdrawn by the partners, they have to pay the interest to the firm. When amount is withdrawn by the partners, partners should pay the interest to the firm. So for the partnership firm, it becomes an income because they receive it from the partners. It's an income on the credit side. We'll take it on the credit side, but see what is the rate? 8%. How much are the drawings during the year respectively? 12,000 and 8,000. But have they given when are these drawings made? Is the date given? No. When the date is not given, remember one. When the date of withdrawal is not given, interest on drawings is calculated for an average period. Average period means 6 months. I repeat, when the date of withdrawal of these drawings is not given, interest on drawings is always calculated for 6 months. And this interest on drawings, what I am explaining you now, we'll be learning in the next sessions in detail. For time being, you just remember that when the date of withdrawal is not given, interest on drawings is taken for 6 months. So let us calculate that for 6 months. It's an income. We'll take it on the credit side by interest on drawings. Then A. What is the amount of drawings of A? It is 12,000. And to what percent? 8%, but for 6 months. B. It's 8,000 into 8% for 6 months. So let us see what amount we get. Now first, 12,000 into 8%, what you get is 960. 12 8 is 96. 6 by 12. 6 by 12 means what? Half of 960. Half of 960 is nothing but 480. 8% of 8,000. When you cancel 2 zeros, remains is 80 into 8. 8 8s are 64 and a 0. 640. 6 by 12 means half of that. Half of 640 is nothing but 320. The amount in the outer column will be rupees 800. 800 is the interest on drawings. Now, after that, A is entitled to a salary of 1,000 rupees per month. So, partnership firm has to pay salary to A. Whatever is the work done by A for the partnership business, for that firm is paying salary. When firm pays anything, it becomes an expenditure to the firm. Expenses will debit. 2. Salary. This salary is paid only to A, rupees 1,000 per month. So A, it's 1,000 into 12 months. What we get is rupees 12,000. Next. B is to receive commission of rupees 5,000 per annum. Per annum means for the full year. Again, firm is paying commission to B. So for the partnership firm, it's an expense. Expenses on the debit side. 2. Commission. Commission is paid to whom? B. There is no need to calculate anything as it is directly given as 5,000 per annum. Next. The drawings during the year amounted to 12 and 8 will be taken in capital account, which reduces the capital balance. Net profit is taken 50,000. That's all. These are the transactions. Let us balance. We get either a profit or a loss. We'll distribute in the ratio of 1:1. Let's see. Now, the total total of the credit side is more. 50,800, which we write on both the sides of the account. Credit side total is more, that means we are going to get a credit balance. Credit balance means profit. And moreover, your income side is more. Your income side is more means the balance is naturally the profit. Now, 14 plus 12 is 26. 26 plus 5 is 31,000. Debit total is 31,000 and the credit side is 50,800. That means the difference in that is 19,800 rupees is our profit, which will distribute among A and B in their profit sharing ratio and record it as 2 partners capital account. Partners capital account, the amount, the calculation will be shown here. A, 19,800 is the profit. 1:1 means 1 by 2. And B, 19,800 into 1 by 2. So, when you distribute, 19,800 is nothing but half of 19,800. What we get is 9,900 will be the share of each partner. In the amount column, 19,800 into bracket, we'll take it as profit. This is how a profit and loss appropriation account is prepared. In this session, we have learned how to prepare a profit and loss appropriation account. We have solved problem number 3. In the next session, on same profit and loss appropriation account, let us take up one more problem. Thank you.